as our company is concerned, that was not the case because we had bought the cotton last year, and the cotton which we were using in the second quarter was bought almost about a year back, and our average cost was in the same range of 53,000-54,000 only. So though the market price of cotton was higher, so people were losing money. Whosoever was buying cotton at that stage, we were not losing money, but at the same time the margins improvement did not happen for us because our actual cost was almost same in the second quarter versus third quarter. So that's why this is not showing the improvement. Two, the overall yarn prices also tumbled to some extent because of the need of future. So I think since the yarn prices did not increase, cotton prices remain same. So I think that's the reason the numbers could not be improved.
But we can hope for quarter four, right? Because the lower cotton prices, which is now, that will get reflected somewhere in our number, right?
Not really, because if we go by the, let's say, last 6 months versus next 3 months, going by today's cotton position, there is no change in our cost of raw materials. So we bought the cotton, as I mentioned, in the last season at an average cost of 54,000 rupees a candy, which we have been using for last 6 months. The current prices are also same. So whatever we are buying today, even if we continue to use in next 3 to 4 months time, there is not likely to be any major improvement in the margins unless need of future increases or the yarn prices improves.
Okay, and last thing on this front, how much cotton inventory we are carrying?
So it's a starting of the season in India starts somewhere in October, November only. So I think it's only about last 2 months, 2.5 months where the cotton is coming to the market. So to that extent, I think we have started buying it slowly. Generally, typically we have a 6-month stock or 7-month stocks by the end of 31st March. So it looks like going by today's pace, we may be in, close to that figures only.
Okay, sir.
31st March, yeah.
Okay. And sir, you have talked about CAPEX in various conference call and various press release also. You have highlighted all the CAPEX in bits and pieces. Just for clarity purpose, if you can just talk about this much CAPEX in yarn, fabric and modernization and at what stage all the projects are, that will be very helpful.
So the total CAPEX announced by the company is almost in the range of about 3,400 crore rupees. And out of that, all the schemes we are working in, except one of the projects where the government approvals are still not there, that's close to about 400 or 500 crores. So the work which is going on as of now is almost close to about 2,800 crore rupees. And that's all going as per schedule only, and we expect that within this calendar year, maybe by November, December, this CAPEX will get completed.
Okay, thank you very much. I will come back in queue.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Keshav Garg from Counter Cyclical PMS. Please go ahead.
Sir, I'm trying to understand that you alluded to the fact that yarn prices also declined quarter on quarter. So if you could quantify that on a per kg basis, what was the average yarn realization in the third quarter and what is the average yarn realization at present? And what is our cost of cotton? I think you already answered that it's around 54 rupees kg if I understood it correctly. So that's the first question.
So if we look at 6 months back, the yarn prices were almost touching in the range of about $3.25 or so per kg. And slowly, depending upon the position of the company, it kept coming down. And as of now, the current prices of yarn are in the range of about $3 per kg of yarn.
Okay. So this and sir, how has it changed quarter on quarter?
Second to third quarter?
No, sir. So from third quarter till today, that is fourth quarter.
No. So this price is third to fourth is only 15-20 days has gone. So the prices are almost same today also.
Okay. And so how is the demand situation? How is the demand supply situation for yarn? Basically globally and as well as in India. And sir, by how long you think that the demand will take care of the excess supply so that our yarn spreads can go back to the pre-COVID level and where we used to do around 20%, 16 to 20% EBITDA margin, which is now come down to 13%.
So, I don't know, where are you seeing this 13%?
No, sir, I'm saying that right now our standalone EBITDA margin is around 13%. And sir, pre-COVID, if we look at FY 16, 17, so it used to be around 20% operating margin. Even in FY 19, it was 18%. So what I'm trying to understand, and then this margin shot up during FY 22, which was an aberration, and now it has come down to low to mid teens. So what I'm trying to understand that when will our yarn spreads, when will they normalize?
Okay. So first question is on the demand and supply. Overall demand is okay. There is not much of a concern on the demand side. So I think in terms of international demand or domestic demand, it's reasonably okay. On the supply side, because of the very bad margins in last 2 years, I think there are lots of small capacities which we understand as the industry estimation has already stopped. So as per the estimation done by one of the large textile players, it is understood that almost 6.5 million spindles have already stopped in India on a permanent basis, which is almost like 15% of India's capacity. And to that extent also, I think demand supply is getting adjusted. So from the demand side, I don't think it's really a big issue as of now. Coming to the margins, why margins are lower for Indian textile players. Our raw material cost today is much higher than the international prices. If you look at the cotton cost in India for the last 15-20 years will always be on an average 4 cents to 5 cents higher than New York future. But this is the time, even today, New York future is at 67, 68 cents. Indian cotton is available at 88 cents. So we are 12 cents higher than the New York future. The yarn prices get established based upon the New York future, that anyone who is getting a cotton, let's say in Vietnam or in Bangladesh or in Indonesia, what is the cost of cotton for them and how did the pricing happen. So to that extent, Vietnamese spinner is still making money. But when it comes to India, we have two issues which we have explained or discussed earlier also. The one issue is our cotton prices have become higher because of a minimum support price, where the CCI is buying the cotton at a minimum support price from the market. As a result of that, our cotton cost today, or the market price of cotton is today 54,000 rupees, which is equivalent to 80 US cents. Two, these situations once in a while have come earlier also, but at that stage we used to import cotton in India, and which will neutralize all the excess costs over here. Unfortunately, we have an import duty on import of cotton almost 11%, which was imposed by the government in the budget 2021. As a result of that, the import in the cotton in India is going to be 11% higher. These are the two reasons. The Indian cost today is much higher compared to the world markets. So the situation will not improve by demand and supply only till the time our raw material prices comes down to normal. And this is the reason our margins are low. The moment our raw material price comes in line with the international markets, I think the margins would improve immediately after that. So it's nothing to do with the demand supply. It's more to do with the raw material cost, which is much more expensive in India compared to any other part of the world today.
So if we see pre-COVID, so then was the situation different? Like, I mean, then what is today? So because I understand the MSP used to be then also, and Cotton Corporation used to buy cotton then also. So basically, what has changed from pre-COVID to now?
So there are three things which have changed. One, New York future used to be in the range of about 75-80 US cents. So even if the MSP was increasing over here, the Indian MSP was still lower than the international parity. So as a result, it was not impacting us. Today, New York future is at 68 cents. whereas the Indian cotton or the MSP of Indian cotton is almost equivalent to 80 cents today. So our cost has become higher. So one, your future has come down. Two, India is increasing the MSP every year from 5 to 7%. So 3 years we have increased it almost by 18-20%. And with the international prices not going up, we have become costlier compared to the world markets. And the only corrective course for the Indian spinning industry was to import cotton, so that our cost is not higher than the world market, even though the MSP could be higher. But unfortunately, 2021, there is an import duty which was imposed by the government in the budget of 2021. So we can't import also. So last 3 years, our situation of raw materials has actually gone against us. So all three factors are forcing spinning industry not to do good in India.
Right, sir. Understood. Thank you very much.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Pankaj Bobde from Affluent Assets. Please go ahead.
Thanks for taking my question. Am I audible?
Yeah.
Well, sir, how is the situation in Bangladesh? Is the Indian textile industry benefiting from the turmoil out there?
So Bangladesh condition is okay. There have been some instances where there are some disturbances in different parts of the country. But if you look at their export figures, their overall production or our sales, the Indian yarn going to Bangladesh, there is no reduction in that. And we understand from our various customers, they are running full capacity. So as such, there doesn't seem to be any major concern from the Bangladesh perspective.
Thank you, sir.
Thank you. The next question is from the line of Vikram Suryavanshi from Phillip Capital. Please go ahead.
Yeah, good evening, sir. Obviously, we understand the impact of very high cost of raw material for cotton. How it has impacted our yarn export, which you used to give on monthly basis. How is our export volume? If you can share that view, I think would be helpful. And second, should I ask second question now or after that?
So Indian yarn export, we used to do almost 100 million kg of exports from India as a country. So in this period also, if you look at last 10 months, 15 months, our average export from India is in the range of about 100 million kg only. So there's no reduction as far as the export is concerned from India.
Okay, so basically volume has remained, but margin is under pressure.
Correct.
Okay. And in terms of capacity utilization in fabric, how much it is and how we can look at export opportunity in fabric going forward?
1 second. Fabric utilization. Currently going forward.
So currently our fabric utilization is at almost 100%. And as you rightly know that we've already planned for our line for our another production line expansion in our plant, and the expansion should be coming at around September this calendar year.
Okay. And would it be possible to share what would be the mix within fabric in terms of raw material between cotton and say synthetic?
Our new production line expansion, the one that I just spoke about, would be more cotton and cotton based.
Okay, expansion is also cotton. And within our spindle, is there an ability to convert some of the spindle into synthetic blends the way we are seeing demand is growing for particularly some of the blends and all?
We are already doing that, but unfortunately, even on the blended yarns, there is a problem because we have a law in India now where any import of polyester or viscose, we require to get approval from BIS, Bureau of Indian Standards. As a result, and which has to be certified by the government or BIS, even for the factories which are situated outside. As a result of that, there is no registration the government is doing. As a result of that, there is no import of of polyester or viscose is coming in India. So today the Indian prices of polyester or viscose are almost costlier by about 10 to 15% compared to any spinner which is getting it either in Vietnam or in China. So unfortunately, the non-tariff which has been imposed, and as a result of that, they are not really very competitive on those products also in the world markets.
Understood, sir. But sir, I think while listening to you, then if you look at when we are talking about increasing the export for India, and we have disadvantage of almost 11% in cotton, again 10 to 15% disadvantage in synthetic. Won't you think it will be a major bottleneck for our target for export, and how industry is looking to address this issue?
It's a big concern because exports can happen only if the manufacturing sector keeps improving. So on the spinning side, we are very clearly looking at there's no expansion happening. And if you look at the machinery manufacturers today, they are all running at an average utilization of 40-50% only. So one, there is no expansion happening. Two, as I mentioned earlier, as per the industry estimate only, almost 6.5 million spindles are stopped, and remaining also still since we are not making money. Most of the spinning sectors, so the modernizations are also not happening. So I think as of now, there seems to be a concern till the time the government decides on the basic raw materials.
Okay, and last question on how is the cotton production outlook?
So cotton, the area under cotton cultivation came down by about 7-8% last year. But at the same time, I think the weather has been favorable. So it looks like last year the total crop was almost 31 million bales in India. It looks like though the government has given, or the CAI has given an estimation of 29.8 million bales, but there could be a possibility just going to almost 31 million bales as well. So in terms of crop size, we can be comparable to the last year, it looks like as of now.
Understood, yeah. But because the prices are below MSP, is there any fear of diversion to farmers can divert to other crop next season?
Not really, because the prices are lower than MSP. The farmer doesn't have any impact of the same because CCI is buying. So, example, today, this season, the total 17 million bales have come to the market till now, and almost 50% has been, if not 50-45% has been procured by the CCI only. So farmer, there is no issue or a concern to the farmer because they are in a position to get the MSP, whether the market buys or CCI buys. So CCI has been buying, and today they'll have one of the biggest stock available to them, almost 7.5 million bales or so. So out of 17 million bales which have come, CCI procured 7.5 million, and they're all holding it into their stock as of now. That itself shows the market is not ready to buy at these prices.
Got it, yeah. That was very helpful, sir. Thank you very much.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Rupam from Investwell Agent Private Limited. Please go ahead.
Hello. Hello.
Yes, Rupam, please go ahead.
Hi, sir. Actually, I missed the part regarding the CapEx plan. So could you just provide in detail what kind of CapEx and what is the ongoing CapEx and upcoming CapEx plan and with the timeline?
So we announced a normal CapEx of 850 crore rupees, one of the schemes, which is going on as per schedule, and we expect it to be completed by September this year, or maybe June this year. In addition to that, we announced a 100% fabric, synthetic filament-based product. That's about 350 crores. That's also as per the schedule, and we expect it to be commissioned within this calendar year itself. In addition to that, we have announced almost 600 crore rupees for the sustainable or the green power. All that capex is also likely to be completed within this calendar year. In addition to that, we announced a fourth line of our fabric processing with a cost of almost about 400 crore rupees. That will also get completed within this calendar year itself. In addition to that, today we have announced another capex of almost 400 crore rupees, and that also we are expecting it to be completed within this calendar year. So except one open-end project of almost about 450 crore rupees, where we yet to get the approvals from the government. I think all remaining 2,800 crore rupees is going as per schedule, and within next 8 to 9 months time or 10 months time, most of this will be completed.
Okay, thank you, sir. That was my question.
Thank you. The next question is from the line of Nirav Savai from Abacus. Please go ahead. Nirav, please go ahead.
Hello.
Yes, Nirav, please go ahead.
Yeah. So my question was the total capex you said is about 2,400 crores, right?
3,400.
And of that 850 crores is, can you just give us a breakup? As in you said green power is about 600 crores. And filament yarn you said about 400 crores, right?
So the normal capex of yarn and fabric is almost about 1,200 crores.
Okay.
600 crores is the green power.
Okay.
400 crores for the fabric expansion of weaving existing lines.
Okay.
Another 400 crores for the 100% synthetic fabric business.
Okay.
And another about 500 crores on the open-end project, which I said as of now is on hold.
Okay. So if I look at this ongoing 1,200 crore capex, which is behind fabric and yarn, what kind of capacity do we see this post-completion? Or is it replacement of existing machines?
So on the spinning side, it's all replacement of the existing machines, except maybe some marginal improvements can come into that. On the fabric side, the weaving capacity of 400 crores will add about 31 million meters per annum capacity, and the 100% synthetic product will have 15 million meters per annum capacity.
Okay, so synthetic is about 15 million meters, right?
Million synthetic, 31 million cotton line.
Cotton. And this fabric expansion, which you said separately 400, so how different is this?
No, that's same existing line of
the part of the 1,200 crores only.
Yes.
Okay, got it. All right, thank you.
But it is only modernization capex.
Thank you, Nirav.
Yeah.
The next question is from the line of Mohammed Patel from Care Portfolio Managers Private Limited. Please go ahead.
Yeah, hi. Sir, I just wanted clarity. You said procurement cost of cotton for current year is almost similar to last year at 54,000.
Yes.
Okay. Now my next question is related to margins. So with the ongoing capex, which is focused on modernization and green energy, which is going to lead to cost benefits, so can this lead to the margins improving from current 13% to 15% by FY27?
We are hoping, because all this capex which is being done, definitely there should be an improvement in the margins on two accounts. There will be cost reduction because of the modernization, and also since we will be more flexible, and there could be a possibility for us to do more value-added products as well. So hope is this only that with this kind of modernization, our EBITDA should improve by 2-3%. Let's look at that.
It should happen starting FY27?
Yeah, sure.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Ritvik Seth from One Up Financial Consultants Private Limited. Please go ahead.
Hi, good evening, sir. So just one question. So what is the cotton yarn spread in Q3 versus Q2?
So it's in the spread, if you look at the Indian cotton, almost in the range of about 70 US cents per kg of yarn.
70 US cents per kg of yarn for us in Q3.
Yeah.
And that would be Q2 would be closer to 60?
So Q2 was almost, a little better, or I'll say almost comparable.
Okay, so around 70 cents only.
Yeah.
And sir, earlier you had mentioned that at $1
Yeah, so if you look at 321, it used to be, the benchmark always used to be about $1.
Okay. So basically at $1 you would make enough money to expand in spinning capacity.
Correct.
You would be incentivized to and that would get corrected if the cotton prices are in line with the New York futures as they were earlier.
Correct.
Okay. Okay, sir. That's it from my side. Thank you and all the best.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Participants, please press star and 1 to ask a question. The next question is from the line of Monish Godke from HDFC Mutual Fund. Please go ahead.
Sir, in the opening remarks, you highlighted that polyester prices in India are expensive 10 to 15% as compared to global prices. And since we are doing a capex in man-made fabric, so how do you plan to price this, product? Will it be at par with global prices, or it will be higher? And what kind of segment are we targeting here?
Hi. So regarding raw materials for our filament, for our synthetics project, so yes, as compared to the rest of the world, prices in India can be higher. So we do plan to have a local base and an import base as well. So we are currently exploring what options are. Like Taiwan is there, China is there, Korea is also there, Japan is there. So that exploration is happening. At the same time, we will be working alongside the domestic players and developing certain products which may not be available. What was your second question?
So what kind of segment are we targeting? Is it for export? I mean, garmenters who will be exporting, or it will be for domestic? And I mean, many a times when we speak with garmenters, they say that good quality processed fabric is not available in India, which is at par with global standards. So are we striving for that kind of segment? Maybe athleisure wear or something like that?
So woven synthetics would more be outerwear. So the jackets that we have, wind cheaters, that would be the segment, and it will be a mix of domestic and export both.
Okay. But the pricing will be at par with global prices, right?
30% is out of BIS, so we should be okay. And also, apart from that, there is weaving and there is processing. So we will be selling high value-added products. So we will try to counteract and mitigate the impact of raw material prices.
Okay. And so, pardon me if you have answered these questions before, that this modernization capex of 330 crores we are doing, are there any spindlage addition which is happening?
Not really. So some small changes. There is more of a modernization where the existing machineries are being replaced with the newer one to take advantage of utility cost or maybe automation, reduction of manpower, reduction of power, etc., etc.
But sir, this will be a part of your regular maintenance capex, right? I mean,
normally our regular maintenance capex do about 150 crores per year. This time, since it was much larger than our normal capex, so that's why we have disclosed this to the stock market also.
So this is like our maintenance 250 plus this is 330, right? And so you don't.
Hello.
Hello.
Yeah.
Okay. No, I'm saying, is this continue to be there? I mean, is it expected to be like? Could you throw some light, like what is the average age of our spindles, and how much maintenance capex now we have to do going forward? Due to modernization.
Average age of our spinning machine part would be in the range of about 10 years now. So normally, I think going forward, the normal capex or the replacement cost capex, to my mind, should not be more than 150-200 crores per year.
Okay. Thank you, sir.
Thank you. Participants, please press star and 1 to ask a question. Participants, please press star and 1 to ask a question. The next question is from the line of Prerna Junjunwala from Elara Capital. Please go ahead.
Thank you. Thank you, sir. So just wanted to understand what will be the revenue addition and profit addition that you're looking from this entire capex of around 3,400 crores?
So on the spinning side, I don't think there's any revenue addition which is likely to happen. Or even the green power, I don't think there's any top line increase will happen. So the top line increase will happen only with the 45-46 million meters capacity, which will be pro rata to our existing capacity. So average so 150 rupees per meter versus 45 million meters.
Okay. So 45 million meters is the processing capacity that we are adding.
Yeah.
Or 31 was the number, right? Or it is?
No, 31 plus 15 of synthetic.
Okay, synthetic. Okay, understood. And sir, with this replacement, what kind of efficiency improvement or margin improvement? 200 bips margin improvement that you mentioned earlier in the call. Is it doable, or eventually, because of market forces, it can be passed on to the customers?
That's anyone's guess. I can't really comment on that. What would happen with the market forces? And showing in the today's circumstances, had whatever we are doing, had that been available today, then our margins would have been better by 200-300 basis points. Now the market
300 is also possible.
200 is surely possible, but what will happen to the market, we can't really comment on that. It can be better, it can be worse also, so that's beyond our control.
Okay, understood, sir. And sir, at current, in the synthetic business, what kind of margins are we looking at? Because this is a specialized product that we're doing for outerwear, jackets and all. Is the margin better than the existing fabric business, or is it in line with that?
What I understand, there are two segments to that. One is the basic replacement of apparel fabric. Second is the specialized products. If we are going to be the new entrant in this, and we have to learn this business as well. So my feeling is, as we keep understanding the business, we'll start moving towards more and more value-added products. And on the technical textile, definitely margins can be 25, 30, 35% as well. But it will take us some time to learn it, develop it, create the market for that, and it's only beyond that. On the basic products, it could be in line with our existing margins of the fabric apparel business.
Okay. So that's really helpful. Thank you and all the best.
Thank you. The next question is from the line of Mohammed Patel from Care Portfolio Managers Private Limited. Please go ahead.
Sir, do you expect cotton yarn spread to improve in near term? So are there any factors which can turn favorable?
So basically, there are only 2-3 factors which can help us. One, if the New York future goes to about 74-75 cents, things will start improving in India. That could be one trigger. Second is rupee goes to let's say 90 rupees, and in US cents our cotton prices comes down. That could be another trigger. Third is government takes any view on allowing the import of cotton duty free. Even then our margins could be better. Other than or overall demand improves much better than the existing demand. So these are all macro level issues. Two are macro level and two are related with the government of India. It's really very difficult for me to comment. I think the only doable or a possible thing looks like if the India future improves by about 500-600 basis points, definitely things will start improving in India also.
Okay, sir. Thank you.
Thank you. Participants, please press star and one to ask a question. The next question is from the line of Anik Mitra from Phenomics. Please go ahead.
Good evening, sir. Am I audible?
Yeah.
Thanks for the opportunity. Sir, what is the current yarn and cotton spread in Indian currency term?
So even in the Indian cotton or the yarn spread is what I mentioned, 72 cents, and if you calculate it with the rupee of 85 rupees, it will be close to about 60 rupees.
60 rupees. Okay. Sir, considering the current Bangladesh situation, so do you think that the garmenting opportunity, like Bangladesh is a major player in the garmenting, so is there any opportunity if Bangladesh loses market share in US, Indian companies can capture that market share?
First of all, as I mentioned earlier also, if we go by the Bangladeshi numbers of exports, there is no reduction and rather they are improving it only. So it looks like doesn't seem to be any concern on a macro level basis. Maybe some areas, some companies, the issue could be there. But if you go by their numbers, I think it's not reducing at all. 2. Bangladesh has become a very big player and their export is already touching almost $42 billion as of now, whereas the Indian garmenting export is only about $15 billion. It looks like Bangladesh next 5 to 6 years can touch maybe about $75-80 billion also because of 2 major reasons. One, they have an advantage of GSP where the Europe allows them for the duty-free exports. 2, in garmenting, the labor cost plays a very important role, and it is almost about 25% in the garmenting, 20 to 25% is the labor cost only. Indian labor cost today is close to about $200 per person per month, whereas the Bangladesh is still ranging about $100 or so. So they have a huge advantage of much less labor cost. As a result, they are competitive compared to India. Third, for any business to create capacities, one is opportunity, second is the margins. I think we do not have those capacities which are required by the world markets as of now. So if there is a major concern happens in Bangladesh, probably that opportunity can come to India. But as of now, they are continuing to grow in big way because of the 2 advantages which I mentioned to you. But yes, if situation goes out of control or goes very bad over there, I'm sure the branch starts looking at the different countries, and amongst those countries, India could also be one of the participants to take advantage of that. But that's not visible as of now at least.
Got it, sir. Thank you so much for your elaborate answer. Thank you, sir.
Thank you. The next question is from the line of Avanish Chandra from Smiths. Please go ahead. Please go ahead, Avanish. Kindly unmute your line in case if you...
Am I audible?
Yes.
Yes, thank you very much for taking my question again. Sir, we are hearing a lot of good soundbite for textile industry in the budget. People are talking about the budget at 10-15% higher budget for textile, and then government may reduce some duties on man-made side raw materials. So any assessment on those budgeting and any benefit that Vardhman can draw from the budget?
I think it will be too premature for me to comment on what the government is going to do in the budget. We are left with only less than 2 weeks as of now. So let's wait and watch please.
Okay, sir. Thank you.
Thank you. Participants, please press star and 1 to ask a question. A reminder to all participants, you may press star and 1 to ask a question. Participants, please press star and one to ask a question. Participants, please press star and one to ask a question. Ladies and gentlemen, as there are no further questions for today, I would now like to hand the conference over to the management for the closing comments.
So, thanks all the investing community which have shown confidence in us and being a part of the company for a long period of time. Though there is concern on the overall spinning industry specifically, but at the same time, our fabric division is doing very, very good, both in terms of utilization and the profitability also. We are also hopeful, going by the industry situation, government will take some decisions sooner or later. And in the meantime, whatever best can be done in terms of the internal efficiencies, operational efficiencies, or the customer base or the touch rate, the company is really working very hard to achieve that, so that even in these kind of difficult times, we can pass through this time profitably or with better margins compared to the industry peers. I'm sure as the situation improves or as any favorable decision comes in, suddenly we'll look at a better improvement in the margins also. But in the meantime, we are preparing ourselves, notwithstanding with the difficult situation. Our capex is one of the highest this year, because we believe that sooner or later things will be better. And definitely going by the patronage of our customers' products, we are surely much more hopeful for the future, and we believe we can add lots of value for the overall textile chain in India. So thanks once again for your patience as well as your stability in the company with your shareholding. And I'm sure as management we will not leave any stone unturned to pass through this difficult time also. Thank you very much.
Thank you, ladies and gentlemen. On behalf of Batliwala and Karani Securities India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.